Hey everybody, Brian Kennedy with the BKC Mortgage Minute of the Week. I got some really good news to share with you, your buyers, your sellers, your friends, your family, and everybody that you know. Conforming loan limits in the state of Arizona have gone up to 726,200. That's an increase over the past year-over-year increase, which we've seen, but it's a pretty substantial increase, being that we're in a market that's kind of shifting from a seller's market to a buyer's market. And what that basically means is Fannie and Freddie are both going to insure loans up to 726,200, which gives us an opportunity for more buyers with less underwriting guidelines, less hoops and challenges and obstacles to go through. And it gives us some satisfaction that we're in a market in the state of Arizona that Fannie and Freddie feel they can raise the conforming loan limit and be sure that this market is going to stabilize and be able to handle the higher values that we've seen over the last 2 years. So that's really, really good news I wanted to share with you. So 726,200 is the new conforming loan limit, and that is available with us today. So reach out if you have any questions. That will help more buyers get qualified and help with down payments, it's et cetera, et cetera. So let me know if I can help. Number two, mortgage rates. We've seen a trend over the last 3 weeks or so down on mortgage rates. Some really, really good news. The main reason for that trend down is all of the very aggressive hawkish Fed index rate risings over the last month over month since about February, March of 2022, where we've seen this actually very abrupt increase in rates over the last 6 months, has come to an end, I believe. And it's not a straight line down from here, but it is a trend that we've seen over the last 3 weeks or so that I believe the tipping point we've reached the tipping point in mortgage rate increases. And we're going to start to see some reflection on or reduction on the way down going forward. And how that works in correlation, the Fed index rate and inflation. The Fed index is always going to raise its rates when we get into a situation with high inflation. So basically why that happened is coming out of the pandemic, we had high government spending, and we came out of the pandemic ready to spend our money. And the economy went roaring to the top from an employment standpoint and a spending standpoint. Well, the supply wasn't there to support that. In addition, with the government spending, inflation shot up. So with that said, the Fed has been raising the Fed index rate, which has nothing to do with mortgage rates. It has everything to do with credit card payments, car loans, how banks transfer money to each other, and home equity lines of credit. But the trend of the Fed index rate going up, and the reason why it's going up to fight off the inflation, is why mortgage rates trend that direction. As the Fed index rate goes up, mortgage rates trend up, but mostly those mortgage rates are tied to the inflation number. So as we see that inflation number come down, which we've seen over the last 3 weeks, you're going to see rates level off and come down too. So please call me if you have any questions about this. This is really, really good news, and there is an opportunity brewing for buyers and sellers on the fence in this market. Have a great week. Talk to you soon. Bye.